Hello, everyone. I extend a warm welcome to you as we convene for another edition of our weekend market analysis series. In this video, our focus is centered on the GBP USD market dynamics amidst recent developments that have seen the British pound drop to its lowest level in the past 4 to 5 weeks. This shift can be attributed to the recent robust US manufacturing and services PMI data, which has significantly impacted the market sentiment. Reflecting on our trading activities from the previous week, we were successful in capitalizing on over 200 pips of price movement by taking advantage of both the bullish and bearish sentiment in the market. If you look at the screen right now, this was actually our trading setup in preparation for last week, where we were looking at a robust demand zone between the 1.264 and the 1.27, which is running right above those ascending trend line we spotted. If we zoom into the current structure, and for those of us who were part of last week's trading setup, you remember we were able to capitalize on this bullish momentum at the beginning of the week, right above the 1.268 as we rode it all the way up into the 1.274 area before selling pressure resumed during the second half of the week. And as a result of the breakdown of that ascending trend line coupled with selling pressure, we navigated the bearish momentum all the way to the downside, breaking down the 1.27 and the 1.26 along the line. For a comprehensive breakdown of each of our entry points, I encourage you to refer to the link provided in the description box below. Now, with the recent upbeat in US economic data, reducing the likelihood of an early rate cut from the Federal Reserve, market sentiment is favoring the US dollar. Meanwhile, the economic backdrop in the United Kingdom remains subdued as we head into the new week. Now, as market participants anticipate the next week's gross domestic product print from both economies, how will the sellers and buyers navigate the current market dynamics? Well, to address this question, we will be, as always, leverage our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the behavioral pattern of market participants and, of course, discern potential price action movement in the coming week. But before we dive into the details, I would like to reiterate that this presentation is designed basically for educational purposes only. And always remember, forex trading carries its own inherent risk, so proceed with caution and seek advice from professional financial advisors before making any investment decisions. With that said, let's dive right into the business. So, as always, our first point of contact is going to be on the daily time frame. Obviously, we do want to see what has been going on in this market prior to next week trading session, and of course, have an holistic perspective into what is going on. So, on the daily time frame here, the structure still remains the same from what we talked about last week. As you will see, since November of 2022, we see that price action had consistently found higher highs and higher lows, giving us an ascending trend line to work with. However, ever since price action tested that highest point at the 1.31200 area here in the month of July of last year, we saw that price action had consistently found lower highs. And as a result of this, we connected a series of lower highs, giving us this beautiful descending trend line to work with. And in fact, the last 1 year has seen how price action had consistently respected this trend line. Fast forward into the last 2 to 3 weeks, we saw how it has become difficult for buyers to actually break out of that trend line, which for me is a red flag that we might be seeing a decline in the bullish momentum and that sellers may be on the verge of taking over the market anytime soon. And from a technical standpoint, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, it makes a lot of sense for us to continue to look out for patterns and structures that supports the idea of selling. Now, in addition to the trend lines, I have my key level for next week situated around the psychological price zone, that is the 1.26850 level. And as you will see here, that since last year, November, this level had played a significant role in determining the direction of price action. It had served as resistance and support line at one point in time during the course of this time frame. Now, remember, our key level serves as a yardstick guiding our trading activity for the following week, as if price continues to stay below the key level, we'll definitely be looking out for patterns and structures that support the idea of selling. Now, in addition to this whole structure here, I'm of the opinion that we might um, be witnessing the initial phase of a retracement move after price action started the momentum in the month of April, as you will see here. And as soon as price got into the structure, we're beginning to see something that looks like a reversal setup where the key level is serving as the neckline of that particular structure. So, are we going to be seeing retest or continue selling pressure below this key level to incite a sell off? Maybe back into the ascending trend line, which will be dovetailing to a minimum of 275 pips? Or are we going to see price climb back above this key level to incite an uptrend continuation? Well, to navigate this important confluence here, we will be leveraging on a simple trading setup that I was able to come up with on the 4 hours time frame. But before we go into that 4 hours time frame, I would like us to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market around the structure. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the charts. Now, based on the asset we are looking at the moment, we are going to be focusing on high impactful economic features from both the United States and the United Kingdom economic docket. Now, the first high impactful event for the coming week is going to be showcasing on Wednesday, June 26th. And the first one here is coming in from the United States, and that is the bank stress test info. Like I said in my previous video, this is an assessment of the major banks in the United States' ability to withstand economic and financial shocks. And the result of this test can significantly impact how the market will be um, navigating the current market dynamic, as this result here provides insight into the stability of financial institution. It is worth noting that positive results can bolster confidence in the banking sector, potentially strengthening the currency of the US dollar, while negative result can lead to currency depreciation. Then fast forward to Thursday and Friday, we are going to be looking at the gross domestic product annualized for quarter one from both the United States and the United Kingdom. And of course, this will be giving us an insight into the annualized percentage change in both economies, real GDP during the first quarter, and of course, a higher than expected GDP growth often strengthen market confidence, leading to positive price action and potentially influencing the central bank's decision on interest rates. Then finally, on Friday, June 28th, we are going to be looking at the core personal consumption expenditure from the United States, a data that measures the average change over the last 30 days in the prices paid by consumers for goods and services. So these are the high impactful event we will be looking forward to. And of course, as technical trader, we understand that the anticipation of this event has a way of influencing the behavioral patterns in the of market participants in the market, and of course, giving us an insight into what is likely going to be happening. Now, scaling back down into the 4 hours time frame where we have a simple trading setup to guide our decisions, what I did here was to consider the character of price action since the mid-month of April, I guess. And of course, you would agree that price action had consistently found higher lows, giving us this ascending trend line to work with. However, that is not where our focus is going to be for this week, as if you zoom in, you begin to see some interesting transformation in terms of the structural setup of price action here. Now, the first thing you would observe is this our key level, which I identified on the daily time frame at the 1.2675. Then one other thing you will notice is how this area between the 1.265 and let me say the 1.26350 had played a significant role in negating the attempts of sellers to push price to the downside. Remember, this level here at the beginning of the month was a strong selling niche before price broke above the structure. And ever since price broke above the structure during the mid month of May, price has remained above that structure. Now, fast forward to last week, Friday, you can see what happened. As soon as price got into that area, we begin to notice some buy pressure emerge from that same area as well. Now, with this information we have gathered here, you would agree with me that we are within a crucial confluence where the support line of that demand zone at the 1.26350 level shares a beautiful confluence with this descending, the support line of this descending channel. Now, with the way things are going right now, what we are going to be doing during the early hours of next week is to monitor how market participant will be reacting to this conflict. How are we going to continue to see buy pressure within this demand zone to incite an uptrend continuation? Or how are we going to see price action break down this 1.26350 level for the first time in about 5 to 6 weeks to incite a selling opportunity? Trust me, I will be with you in the comment section on Monday morning after monitoring how market participants will be reacting to that important confluence during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are always valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.